When it comes down to saving and securing your money, the first thing that pops up in your mind is a bank. Up till now, it was thought that our money was safe in the banks. But that's not what Robert Kiyosaki, an American author and businessman, agrees with. Why does Robert think that what's going on today with the global economy and key banks is nothing but deception, betrayal, and collusion? Well, stay tuned to find out. As stated by Rich Dad Poor Dad writer Robert Kiyosaki, the banking crisis is far from over, and the next phase is expected to include one of the world's biggest central banks. He has also warned that the current inflation situation in the US is more likely to worsen than before. In fact, in one of his tweets, Kiyosaki has advised investors to take action and move their wealth into investment products such as Bitcoin, gold, and high-end products before they become excessively costly as systemic inflation continues to exist. Why is Kiyosaki giving such advice to the investors? Is another economic downturn approaching? And what does Kiyosaki have to say on the current banking and economic situation? Well, we are back once again to unveil it all for you on B-Biz, so stay right with us as you don't want to miss this out. In a conversation with Fox Business on Thursday, Robert Kiyosaki voiced his disappointment with the current market rise and warned that Japan's central bank could be the next major entity to run into trouble. He said that it is going to be the Bank of Japan to go down first in case of any economic recession, referring to the bank's strong dependence on trading in derivatives. Kiyosaki has previously stated that he predicts the futures market to crash as other financial institutions across the world raise interest rates. He further mentioned that Japan has been financing derivatives, which in the market are worth $1 quadrillion, which is also the reason why the Bank of Japan has not witnessed any crash until date. The United States Federal Reserve has been steadily increasing interest rates from the last year to combat inflation, with the Fed funds rate today ranging between 4.75% and 5%. This is the highest recorded level of financing rates since 2007, and Kiyosaki was critical of the policy actions for impacting severely on the value of assets. His perspective on the financial crisis varies from that of economists, who believe the fallout from Silicon Valley Bank's failure will be limited. The failure of the mentioned bank in early March fueled fears of a bigger financial catastrophe, but many say the problems at the bank were the product of poor risk management rather than structural instability. Fed officials allegedly saw red signals at SVB for a long time before it was shut down. Stock market trends and market volatility have fallen as well over the past few weeks, as troubled institutions such as First Republic have regained their financial stability following prompt assistance from the government and large banks. However, experts worry that the crisis has increased the possibility of a downturn, as banks are dealing with massive capital losses as a result of SVB's collapse, which could increase lending conditions and prevent economic growth. Kiyosaki has been a market investor for years, who had previously predicted as well that soon the marketers and shareholders will witness something, which he described as the biggest economic crisis in world history. He told his Twitter followers at the time that rising interest rates were destined to crash inflated valuations of assets, and recommended them to invest in cryptocurrencies and precious metals such as gold or silver. So what made Kiyosaki talk about this chaotic situation? His remarks come during what several have excitedly labeled a market resurgence, following another solid day for stocks and markets in March, and that pretty much answers the question. On the other hand, he also questioned the possibility of a recovery, citing problems with the future markets. He also warned that the Bank of Japan's excessive reliance on derivative markets puts it in a weak position and threatens to have a wider impact on the global economy. While the United States dollar was designated as the world's reserve currency in the 1940s, China has taken active measures to compete in the marketplace and replace the dollar with their yuan. Their expanding influence, as evidenced by initiatives such as the Belt and Road program, has only increased popularity for the communist country. Kiyosaki added that as China, India, Saudi Arabia, and Russia are going to switch to the Chinese gold yuan, they will send trillions of dollars back to the United States. He also stated that in view of the Globe Economic Forum being held in the Swiss city of Davos, the globe is on the verge of one of the largest financial disasters since World War II. He also stated that world rulers may adopt extreme steps that could lead to warlike scenarios, and that people should begin storing for basics such as food, firearms, and value units such as Bitcoin and metals of value. He has previously advocated for Bitcoin as a solid reservoir of value. In the past, he put a light on the different advantages of Bitcoin as an asset of value via his tweets. In a recent tweet, he stated that Bitcoin is the future of wealth. The author also claimed that rising interest rates are threatening the market's demise. Interestingly, the investor had earlier warned that the current interest rate environment would almost certainly lead to a stock market meltdown. Simultaneously, Kiyosaki took advantage of the occasion to define the intended audience for his tweets. The author, who has long advocated for preparedness in the event of a worldwide economic crisis, stressed that his lessons are not intended for a poor or middle-class mindset. In his tweet, he added that if a person is satisfied with being poor or middle class, then they can remain in the same state without having to do much. But if someone really intends to be rich or wants to change their current situation, then they should really change their mindset. Before making the recent warning, Kiyosaki had also criticized Jerome Powell for supposedly lying about the country's economic state. According to an early March Finbold report, the financial educator suggested that residents should prepare themselves for rising costs, noting that the Fed lied through his teeth when he said inflation was temporary. On the other hand, he expects inflation will continue to rise and that the recent banking crisis would exacerbate the problem. According to Kiyosaki, the United States is likely to print more money to bail out the failed banks, resulting in significant inflation. In this regard, he believes that the Federal Reserve would further degrade the dollar, comparing it to toilet paper. Kiyosaki has also warned about the collapse of Credit Suisse, saying that after SVB's shutdown due to the banking crisis, Credit Suisse is also next in line. In an interview, he stated that he was concerned about the situation and also about the bond market as it is going down day by day. And with his prediction for the Lehman Brothers, he thinks Credit Suisse is going to be the next victim of the market collapse. He refers to the bailing out of banks when more money is printed to fake the drowning economy as a conquest. Credit Suisse's stocks fell following the failure of Silicon Valley Bank, SVB, reaching an all-time low on the Swiss stock market on March 13th. The venture bank share settled at 2.20 Swiss francs, $2.41 per share, a decrease from a prior low of 2.41 Swiss francs, $2.64 on March 10th. Stocks dropped nearly 20% year to year. The bank's bond prices also dropped substantially in the aftermath of SVB's failure, adding to investors' concerns. The Swiss regulator FINMA declared that it was attempting to detect any possible danger of spreading from SVB's demise to Switzerland's banks and policyholders. UBS, another Swiss bank and competitor to Credit Suisse, had its shares collapse by more than 7% on the same day. The government agencies, however, did not explain any actions it would take to assist the country's banks. But they did mention that they were watching everything very closely for Credit Suisse as a part of their monitoring process. Credit Suisse, which is also Switzerland's second-largest bank, continues to struggle from an array of crises, legal squabbles, bad news, and scandals in recent years. Antonio Horta Osorio, its chairman, quit in January 2022 after being found in violation of COVID-19 guidelines. The next month, the bank was in the news due to allegations that it had clients who were human rights violators and blacklisted businessmen. Well, now the situation sounds pretty daunting, as Kiyosaki has clearly discussed everything in his podcast that banks are now on the edge of collapse. And if things are not given serious attention, the scenario might get even worse. Let us know what your thoughts on the current economic situation are in the comments down below. Also, if you have discovered our channel for the first time, do like and subscribe, and turn the notification bell on so you never miss out on our future videos. Thanks for watching, and we'll be back soon with another one.